Greetings to one and all. You're listening to MMJC Fortnightly Podcast. Currently, all the companies are working on closing of their books of accounts for financial year 2022-23. But before the financial audited statements for FY 2022-23 are available or simultaneous to this process, there is a requirement under Companies Act to file a return of amounts received by the company and outstanding as at 31st March but excluded from deposit definition to MCA in Form DPT3. The due date of filing this form is 30th June of every year for the amounts outstanding as at 31st March. As everyone is well aware, the Form DPT3 has been shifted to V3 portal of MCA with effect from 31st August 2022. During this transition, the form has also underwent some modifications. Since this is the first time companies will be filing Form DPT3 in V3 portal, we shall be discussing amendments to Form DPT3 in this edition of podcast. As per Rule 16 of Companies Acceptance of Deposit Rules 2014, the return of deposit accepted and repaid should be filed by the companies who accept deposit from public at large or from their members. Also, as per the explanation appended to Rule 16 Sub-Rule 1, there is a requirement to file a return of amounts received by the company and outstanding as at the end of the financial year but are excluded from definition of deposit. For providing details of both the kind of returns, a common form called Form DPT3 is prescribed. Based on the selection of purpose of the forms, fields are displayed to provide adequate and correct information. Even though the form for submitting both the type of returns is common, there is one key difference that needs to be highlighted. While filing the form for return of deposits, the figures have to be taken from audited financial statements of FY 22-23. But in case where the return is being filed for amounts outstanding as at 31st March but excluded from deposit definition, the figures need not necessarily be from the audited financial statements. This is a very relevant difference. At the time of change or shifting of the form from V2 to V3 portal, the form was amended to include in it an aging schedule for all the categories of monies outstanding as at 31st March. This aging schedule requires the companies to classify the amount into three categories. They are amounts repayable within 1 year, amounts repayable after 1 year but within 3 years, and amounts repayable after 3 years. The next key amendment to the form is with respect to the certification of the form by the auditor. Earlier, if the form was being filed for return of deposits, only then there was a requirement to attach a certificate from auditor saying that the figures mentioned in the form are correct. But if the form was being filed for return of amounts excluded from deposits, such requirement was not applicable. But now with the transition of the form to V3 portal, this scenario has changed. Now, even if the form is being filed for excluded amounts, the auditor is required to digitally sign and certify the form to say that the figures mentioned in the form are correct. As discussed above, in case of DPT3 being filed for amounts received and outstanding as at 31st March, the companies are under no mandate to provide audited figures. And also under Companies Act, the companies have timeline up to 30th September to conduct their annual general meeting for getting the financial statements adopted. Therefore, majority of unlisted companies schedule their calendar of getting the financial statements audited in the month of July or August. But the due date for filing the form DPT3 is 30th June. Therefore, every year, majority of the unlisted companies have been providing unaudited figures for amounts outstanding as at 31st March. From this year onwards, due to transition to V3 portal, the auditor will have to certify the correctness of the figures provided in Form DPT3 even before he completes his audit. In such a case, since the auditor may not have completed the audit of the company till the due date of filing the form, will he be in the position to certify the correctness of the form is a question. To provide a viable solution to this practical difficulty, the timelines fixed for completion of audit will have to be preponed, or otherwise the companies will have to determine such mechanism which will enable the auditors to certify the figures even before the completion of his audit. Such solutions may include taking help of company's internal or control system, or providing additional backups by the company to the auditor. To conclude, we suggest that the companies and their statutory auditors should work in coordination with each other in this regard well before the due date of filing Form DPT3 to ensure that the form gets filed smoothly, as there is no chance of revision to this form once it is filed on the V3 portal. So, planning of all these activities will definitely prove useful to companies as well as to their statutory auditors. This is all in this edition of podcast. Thank you for listening.